the second section of the chapter, like I just got done explaining to you guys, is kind of a make or break. You really, really need to understand this part. These are the vocabulary bits that we're really going to focus on. With the importance of knowing what I just started and the difference of them. The process of journalizing and then putting it in the ledger is called posting. Talking about the terms is one thing, but actually putting them into practice is where you're really going to start to understand what they mean. So let's go into them a little bit more in depth. What is a journal? And I'm not talking like the Dear Diary, lock it up kind of daily journal. Rather, it ends up being where the transactions are recorded chronologically, so by date. At its surface value, the journal kind of looks like a mess. It's the original book of entry, or what's considered bookkeeping. I think is there 2 K's in bookkeeping? I can't remember. Anyway, so if you look at the I, the R, and the C that we talked about last chapter, we identify what constitutes a transaction, and then we record it. That's this section right here, the big recording, bookkeeping, really the accounting side of all of it. What does a journal look like? It looks like this, and it should be in your notes. It's called a general journal. The only organization to it, really, to me, is the chronological. You know, October 1st, and then October 2nd, and October 3rd, and 3rd, and 3rd, and 4th, and 5th, all the way through the month. You'll start to see some things that make sense. You see debits are on the left, credits are on the right. There's columns. You see something like account titles. So like you've seen this, it's just a giant place where all the transactions are recorded. And when you journalize, there's 5 steps that you need to follow. You begin by putting in the date. Of course, in real accounting, you'd probably do all of this on the computer. And you'd hit a button and hit post, and it would go off to its individual ledgers. But you got to learn it the pen and paper way first. Then you'll list the debit, both from the title and the amount. And it's important that you always list the debit first. So do you have this little tiny thing in yours? Yes. In this case, cash is going up because the owner is investing capital. So if cash is going up, it's the debit. Let's say later on we're paying cash for supplies. Even though we know cash is going down, we wouldn't want to list it first. Always list a debit first when you're journalizing. Followed by the credit, and then its title and amount. So when I say title, that means like which account? Is it cash? Is it supplies? Is it owner's equity, or excuse me, owner's capital? Is it drawing? So which account, and then what dollar amount? Can I stop down here and say debit means increase, credit means decrease? I can't. It really depends on which account it is. So the first thing we do is date. The second thing we do is the debit, title, and amount. The third thing we do is credit, title, and amount. Let's stop and put like a number 1 right there, a number 2, and a number 3. So you can see it physically. Am I not connected to your computers? Oh my gosh, okay. That makes a difference. I'll finish this slide and I'll connect. Then you are going to briefly explain the transaction. Real accountants probably don't do this. The book likes you to do it since you're beginning accounting students. I tend to forget this because I didn't learn accounting this way. But all you do is there's a line right here where it says like owner's investment of cash in the business. It's a really easy way, so there's step 4, to basically restate the transaction. As we get into some end of chapter stuff, you'll see what that means more. And then you need to put something in the reference column based on what you posted to the ledger. We're going to talk about ledgers in a minute. So we can tell that on October 1st, the owner invested $10,000 cash into the business. You see cash debited because cash goes up. You see owner's capital credited because that goes up. If there's a debit, there's a credit. Then we restate the transaction, and then we go post it and put something in the reference number. I hope it seems easy so far. Let me connect to your computers. Is that better? So we know that we're putting things in this journal. That's kind of a mess. Well, there's two kinds of entries. You can have a simple entry or what's called a compound entry. A simple entry is two accounts, one being debited, one being credited. Most of your transactions will be a simple entry with a debit and a credit. Occasionally, you'll have what's called a compound entry where there's 3 or more accounts impacted. So maybe 1 or more debit with 1 or more credit. The example, and you guys know this one, the example is perfect. Purchased equipment with some cash down, owing the remainder at a later date. Yes. 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 So there could be 2 debits and 1 credit, or 2 credits and 1 debit, but they've got to equal. Yes. So let's just look at this example and talk debits and credits for a minute. If I bought equipment, that asset is debited. I'll just say for $1,000. Okay. And we also now owe money on this equipment. So then that's an AP credit of, let's say we put 500 down. Cash is going to go down by 500. AP is going to go up by 500. Does 1,000 equal 500 plus 500? Yes. So that's a compound entry because kind of like what Jenna just asked, could it be 2 debits and a credit? Yes. In this case, it's 1 debit and 2 credits. The difference here, now had I done this a simple way, like had I bought the equipment using cash, it would have been equipment went up by 1,000, cash went down by 1,000. That would be a simple entry. Down here, 3 or more accounts are impacted. On a test, if they said a compound entry uses 2 or more accounts, it would be false. What makes it true is that it's 3 or more impacted. Yes. Yeah, and I shouldn't have put that because remember, it's not necessarily debit or. You'll see how that works when we post to a ledger. Just know that 1,000 equals 500 plus 500. Yeah. I tend to put that there just so I can remember, oh, okay. You're going to get better at knowing if cash is credited, that is definitely a minus. You'll see that clarified a little bit in a minute. Okay, so now we've journalized in this crazy long journal that's kind of unorganized looking. We are going to then post or transfer or move what we did in the journal to the ledger. Posting is simply transferring or moving what you did in the journal to the individual ledgers. That's where the pluses and minuses will make more sense. Do you have this in your little baby notes? Yes, I think so. Okay. Next, the ledger. And if you're confused, trust me here. I'm going to explain this whole thing with another example. The ledger is an entire listing of each account individually. It's organized by assets, liabilities, owner's equity, revenue, and then expenses. So it's organized by balance sheet accounts through income statement accounts. So I'm going to backtrack a little bit. Instead of like searching every time I used cash, whether it went up or down, when I post or move it from the ledger, excuse me, the journal to the ledger, then I can see what's going on individually in cash at any given time. So we've got the journal with the big amount of stuff. We post or move those numbers to where they individually made sense. So like on that compound entry example, we used a little bit of cash, we gained equipment, and AP went up. And then the next time, if we use a little bit more cash and did a little bit more, this is like a snapshot of each account and what's happening and plussing and minusing, instead of having to like wade through that big long journal to figure it all out. Speaking of the big long journal, do you have this in your notes? I forget what I put in your notes when I give them to you so soon. Perfect. Okay, this is a journal. This is the chronological listing of everything that went on in the month. On October 1st, something happened. On October 1st, something else happened. On October 2nd and 3rd and 5th and down to the 20th. This is kind of a mess. Yes, I see the date. Yes, I see the debit and the credit and the fact that it's restating what happened. But then I go tell more of the story. This also looks kind of chaotic, but here's what I'm talking about. I'm going to move that in a minute. So on October 1st, cash was debited for $10,000. What I'm going to go do is tell that individual story or post it. Hang on. I'm going to go say, okay, Cash, let's talk just about you for a minute. On October 1st, you increased by $10,000 and now you have a $10,000 balance. I'm going to take that number assigned to cash, which is its account number of 101, and I'm going to go back and say, okay, in the general journal, I went and did the individual cash work in number 101. Now I'm going to go to the next one. Owner's capital. We credited it for $10,000. So what I would do is go find owner's capital. Do I not even see it on here? Well, it'd be in here. We'd put our credit of $10,000 in. We'd put our number in, and we'd come back and put 301. It's got to be there. No, I don't. Well, they're giving us a really weird version right here. Shame on the book. I want to give you an example of how does this apply to even our school, okay? Because some of you are looking like, oh boy, I'm kind of confused. Okay, right now, if they would send us all to the gym for a pep fest, like they're going to do a week from tomorrow, we kind of maybe sit by our friends, but are we all kind of intermixed? Yeah, you know, there's maybe some freshmen sitting here and there's sophomores over here and maybe there's a group of freshmen and sophomores over there. So if we're at a pep fest, that's kind of like the journal. We're all kind of mixed in, just like Cash is here and then a couple lines down, Cash is there again. There's a couple freshmen there, there's a couple sophomores there. It's not like we're sitting perfectly. But if Mr. Eckern gets on the microphone and says, I need all the seniors to come to the gym floor, then all of a sudden they're pulled out from every corner down on the gym floor and we can see the story very much in front of us. And then if he's like, okay, juniors, you go over to that corner of the gym. It's like we're pulling them out of that big mess and we're putting them in sections, okay? That is like the ledger. You know, there was a few seniors sprinkled throughout this journal, but when I tell them all to go to one spot, then there I can see them all and the activity that's happening of that pile right there. Same thing with lockers. You know, if I take all of MAHS, you're all in classes right now, second hour. Happens to be all seniors in here, but a lot of my classes are mixed. Well, when the bell rings, the seniors go to their lockers, the juniors go to their lockers, the sophomores go to their lockers, on to 9, 8, and 7, okay? So you're all in classes sporadically throughout the school, but there's certain sections of each hallway that you belong to. So when you're all together, it's like the journal, kind of a little bit of a mess, all sprinkled in together, but then your lockers are kind of divided by each story or each ledger. So let me backtrack. This is like you're all in second hour. There's a few of you here, there's a few of you there, there's a few of you here. But then if I post and tell that story, okay, seniors, you go to your lockers, that's like saying, okay, cash, you go tell your cash story here, and okay, supplies or juniors, you go to your little story. So this is like telling just the story of each account instead of wading through all of this craziness. Did my example help a little bit? Let's look specifically at cash. Oh, here. Let's look at cash a minute. Cash is what kind of account? In ALLO, assets, okay? It's on the left side of the big T. So its normal balance would be an increase. Its opposite would be a decrease. By posting to a ledger, although back here there's cash kind of sprinkled throughout, this tells the complete cash story. It was a plus 10,000, a plus 1,200, minus 9, minus 6, minus 5, minus 4,000 plus to equal. And we're updating every time. That's probably where I should have done my pluses and minus, Jenna. Would you agree that makes more sense there? If I come over to revenue, though, it's all flipped around because revenue is part of OE, which is on the right side of the big T. So in that case, the credit is the plus, the debit is the minus. So it's just telling the individual stories of each account versus like, oh, I mean, this looks organized, but from an individual perspective, it's kind of unorganized. Just like when you all go to the Pet Fest, it's a little bit unorganized until Mr. Eckern says, come on, seniors, you come on down here, okay? That's like saying, cash, you tell your story. Where are your pluses and minuses? It becomes more organized. And the process of moving it from this journal to the ledger is called, starts with P, posting. Then you take this 101 and you come back and say, okay, I did the business in 101. If you're doing automated accounting, you'd probably be able to plug in cash and you'd hit a button literally that says post and it would go update cash for you automatically. Back here, and I know I'm not trying to get you all wiggy here by popping around with so many slides. Right here, could you tell me that cash, just by looking at this, could you tell me the cash balance? I mean, you probably could. You could find every time that cash was used and add and subtract, but by posting it, I know on any given line what my balance was. This is a closer look at one individual account. This is looking at just cash. Do you have that one in your notes? Okay. So if I backtrack, this is taking a look at just cash. And I've already kind of talked about this. I got a little ahead of myself. As far as the cash account, now is this the journal or the ledger? This is the ledger. That's the individual look at each account. On June 1st, something happened. On June 2nd, something happened. 3rd, 9, 17, 20, 30. Instead of me wading through that big journal to find every time cash went up or down, this gives me a clear picture, okay? Cash, as we know, is an asset. I already did this with you, but we'll do it again. if I look at ALLO, it's on the left side of the big T. Left means debit, so that's probably the plus. Opposite of the plus is the minus, and then do we add or do we subtract to our running balance? So there was 25,000 plus nothing equals 25,000. A credit, and where are we getting all this? We'd be pulling it all from the general journal. A credit, according to this, and when we start like this, I'm going to make you literally put pluses and minuses everywhere, just so you get used to debits and credits. If we have an $8,000 credit, that means for cash that's going down. So 8,000 minus its current balance is 17,000. We have a couple pluses, and we're updating the balance every time. So, you know, like 21,200 plus another 75 increases it. Minus, minus, minus to get at an equals at the very end. 101 simply gets put back on the general journal. I think it's a good idea to stop and do a couple transactions and a couple little problems just so you guys can start seeing this in action. It's actually a pretty good stopping point. Let's do brief we'll just start, and we'll just keep going until we run out of time. You will not have homework tonight. We're just going to keep rolling right into this tomorrow. Reading about it's one thing, talking about it's another thing, doing it is the icing on the cake. Excuse me, that was probably really loud in the recording. So, I think it's in your workbook. Brief exercise 2-3. Woo! And you'd find it on textbook page 80. All right, so we'll start here. You guys have really nice layouts. I don't in my answer key, but that's okay. Oops. I'm going to label things, though, before we do anything else. Let's write down our 5 steps. And you can write it, you know, like on the back of a page or on the side margin somewhere. There's not a ton of room, but let's write down our 5 steps when journalizing. So let's just stop for a minute. We're journalizing. Is that the super organized, like little pictures of each account, or is it the big long blah? It's the big long blah. It's the big journal that's chronologically listed. For us to make it neat and pretty, we'd have to post it over to the general ledger. We are not doing that for this problem. We're just journalizing, okay? The first thing that we're going to do is we're going to do the date of our transaction. The second thing we'll do is debit both the title and the dollar amount. The third thing we'll do is the credit title dollar amount. The fourth thing we'll do, I'm running out of room, so I'm going to just erase. The fourth thing we'll do is do a quick explanation. And the fifth thing that we're going to do is what's called the post reference number. We're really not going to post, so we'll just fake it, okay? I see a debit and a credit column. Can you immediately put a plus and a minus above either of those? You actually can't, because remember, debit and credit does not mean plus and minus respectively. It depends on which side of the big ALLO divide you're on. I'm not going to put pluses and minuses here, so I don't want to confuse you. If we post, yeah, we could do that, but we're not posting. So I'm on page 80 where it says brief exercise 2-3. Use the data from brief exercise 2-2. Journalize the transactions. You may omit explanations. I forget if they have it all I think let's get in the habit of let's put the explanations in and let's pretend to post. I want you to get used to those 5 steps. So if I go back up, June 1st. So we did these yesterday. We talked about these yesterday. Now we're going to actually journalize them. This is actually doing accounting. So you can finally tell all your loved ones, I actually did accounting today. Woohoo! George Lynch invested $5,000 in a small welding business of which he is the sole proprietor. We did these yesterday. Now we're going to actually journalize them. What's the first thing we have to do? Date it, June 1st. You can write out June and 1, or you can put 6/1/2017. Is it dated for you? Okay, that's what I had a feeling. So step 1's done. What's our second step? Debit. Okay, let's think about this a minute. What's our debit? I can't say what's going up, but what's our debit? Cash. You don't have to put those dots. Okay. Typically, debits are flush over there on that left margin. What's our credit? It's $5,000. This is a simple entry. Whose overall worth went up? George Lynch. What's that called? Owner's capital. Notice what my answer key does. It indents the credit. There's only 8 of you. If you choose not to indent credits, I still am going to be able to grade appropriately. But a quick way to show where the credit is to indent it. Okay. I see a debit. Cash went up. I see owner's capital went up. What's the 4th step, even though they told us we didn't have to do it? Explain. So on that next empty line, do you have a next empty line before the next? Okay. That's where you basically reword what happened. So let's just say owner invested cash in business. What's the 5th step? Post reference. Okay, do you see the reference column there? Or do you not even have one? Authors, what were they thinking? Let's make one. Okay, can you just make a little tiny baby post reference column? It would typically go right here. I don't know if there's enough room there, but just try it. What would we do here if we were really going to post or transfer each of that debit and credit to the ledgers? What would we do? What would we do with cash? Would we go look for the cash account? And would we debit it $5,000? And then would we bring that little tiny baby number back and put it over there? Let's just put a 101 right there. That's typically the number for cash. I don't know if it's really that number, but typically it is. I'm just making it up. What you'd usually do, like if you look back in your notes, they usually have like little tiny numbers. We're going to talk about those tomorrow. It's just that the authors kind of did a poor job of laying this out. It's okay. Typically cash is 101. Okay. Typically owner's capital is, let's just say 401. It's not always, but we're going to talk about account numbers later. Cool. You know I'm kind of making those numbers up. Okay. Next transaction, June 2nd. We purchased equipment on account for $2,100. Well, let's do the first thing. Let's put in June 2nd. Now, is it just a number 2 sitting there? Yeah. Typically, you'll just start at the top with whatever month it is, June 1, and then you can go 2, 3, 4. Some kids like to use June all the way down. It's really up to you. Okay, I wish I could say what increased, but they both increased. Okay. What's our debit? Equipment. Tell me why that's the debit. Because it's an asset, and assets increasing are a debit. Okay, going back to the wrap. Equipment went up. one up. Did we pay cash? Okay, when we owe money, what account is it? Accounts payable, and that was credited for $2,100. The cool part here is maybe when you know you get equipment, that asset's going up, you know that's the debit. The other half has to be a credit. It's just figuring out which one has to be that credit. What could have the credit been here if it would have said paid cash for equipment? What would have the credit been that time? Cash. And is cash going down a credit? Yay, okay. On the next line, let's do a quick explanation. So, purchased equipment on account. I don't really care how you word these. I don't think real accountants would do this. It's just that the book's wanting you as a new accounting student to do this. I mean, even here, the direction said you may omit explanations. They're just kind of fluffy foo-foo, okay? So we've dated it, we've debited, we've credited, we've explained what's our fifth step. Okay, that's where we've taken equipment out of there, and let's go post you to your little baby account. And then accounts payable, let's suck that out of there, post it over to the accounts payable story. That's what posting is. Let's see if I can pretend what I would put these numbers in. You'd go post, and then you'd come back here and say, let's do 120 for account or equipment. I'm making this up. And then let's say 201. There's rhyme or reason why I'm picking those numbers. That's typically what they are, but I'll teach you about that tomorrow. You're on the edge of your seats, I'm sure. June 3rd, plug that date in. It's already there. $800 cash is paid. Is that the debit or credit if cash is being paid? Okay, that's the credit. So now we're searching for what other one? The debit. To landlord for June rent. Easy one. Cash is the credit. I'm just kind of searching. What's the debit? Rent expense. Now, okay, this is beautiful things. This is like where it's like almost tearjerker over accounting, you guys. Where's the normal balance side of an expense? Remember, it's a nutty account. It doesn't follow the credit rules. It's a debit account. Okay, so you're putting in rent expense. I have a debit. The other one has to be a credit. Well, cash was paid. Cash was out the door. I know that that's a credit. Fourth step is to just give a quick explanation. Paid rent. Something simple. I could have said paid cash for June rent. And then the last step is to just say, okay, suck it out of this crazy chronological journal and post it over to their individual little baby stories. Let's go with 520 for rent expense. What was the cash number that I gave you before? 101. Okay, I'm going to just stop here for a minute. Do you see why we have ledgers? Because isn't it? Yes, Carrie. Great question. Are you posting line by line, or are you posting at the end? I usually let students pick. When you're posting individually, like line by line, it's a lot of page flopping. I'll teach it to you that way, but students will be like, oh, it's so annoying to post that way. I'm just going to do all my journaling first and then go post at the very end. Technically, you're going to yield the same result. It's just, are you flopping pages or are you doing it all at the end? Good question, though. It's going to end with the same results, okay? Are you going to have to do this on the test? Yes. But a practice test will do it, and of course A and B problems and even the C problems. So you'll be really good at this. You're going to be really sick of posting by the end, knowing that in real accounting it's probably a button and bloop, it updates the story. But let's just stop for a minute. Could we tell the cash story right now if we had to? What's the cash balance? I have a debit of $8,000 and I have a credit of $5,000 and I have a credit. What is the cash balance right now? $4,200. But imagine if this journal was pages and pages and pages long. Ew. That's where it almost looks unorganized. We can tell that cash has a $4,200 balance because I've seen a debit and I've seen a credit. Had we posted it, it'd be right there for us. Okay. Last transaction. Sends a bill to M. Rodero for $300 for welding services performed on account. Well, let's date it. That's easy. Okay, June 4th. What in the, or 12th, sorry, 12th. What's our debit? Okay, if I performed a service, I know that's the credit because service revenue is a credit. It's on the right side of the big T. I know the credit. What's the debit? Did this Rodero fella give us money? It is accounts receivable. Tell us why. Oh, it's eventually. So, ooh, assets going up. Are we real happy about this asset going up? No, because we're walking around on pins and needles going, is M. Rodero even going to pay us? Eventually, we're going to see this asset go down, and then what asset would go up? Eventually, cash. So there's our debit. The other half has to be a credit. It's called service revenue. Is that a good thing? Is that credit a good thing? Yeah, because service revenue is part of owner's equity. It's on the right side of the big T. It's making our overall worth go up. Let's do a little explanation. How would one of you explain this? Really easy, simple. How about just build customer? So I'm just going to put AR there just so I'm like, oh yeah, that's right. That's when I build a customer, it's AR for services performed or whatever. Okay, then our fifth step, we'd suck out of this crazy journal that's messy and chronological and seems to kind of make sense. Okay, 300 debit to AR. I'm going to go put you in your little baby story and then take that number and come back. Let's see, let's do 110. I'm, again, not making this up out of thin air. It really has a rhyme or reason. And service revenue, let's do 401. There you have it. It's weird. Oh, let's do 410 then. Can you tell the assets are 100s? The liabilities are 200s. Ooh, I should have done 301. I should have had capital at 301, service revenue at 401, and then expenses are 500s. I'll teach you about that tomorrow. Now, we're not going to quit like we did yesterday. You guys had some free time yesterday. What does your brief exercise 4.2 even ask? Is there a journal page or is it a workbook page? Okay. Okay, perfect. Let's write it all down. This is not in your workbook, but this is basically retelling the full story of what you've learned all day today. So let's do it, and this will be a good stopping point. Like Jenna just read, in brief exercise 2.4, Raymond Faust, a fellow student, is unclear about the basic steps in the recording process. Identify and briefly explain the steps in the order they occur. So this looks like it gets recorded in your notebook. Here's what I'd like you to do. Journal, post, ledger. You're also going to see reference to the journal and the ledger as the general journal and the general ledger. If you think what we're doing right now is a little scary, later in the book you're going to learn that there's 5 journals, not just one, and there's 3 ledgers. not just one. So that's why let's get used to calling these general journals general ledgers, because later on we're going to learn about all the special ones. All right, there's 5 steps when we journalize. We date our transaction. We debit. I know we just wrote this down, but it's so good to be repetitive here. We're going to debit the account and a dollar amount. We're going to credit an account and a dollar amount. That process is simple versus compound. And we didn't do any compound today, but I explained it. Compound is 3+ accounts. 1 debit, 2 credits, 1 credit, 2 debits. Then we are going to explain what just happened on the line. Sometimes they'll say you can omit the explanations. And the last thing we'll do is put something in the post reference column. A journal is chronological, based on, of course, the dates that things happened. Carrie asked a really good question. Should we post entry by entry, or should we wait until the end? It's going to yield the same result, but posting is the process of transferring journal activity to individual ledgers. I sucked it out of the journal, and it's like almost like when you're at the bank, you know, you put your little money in that little tube and it goes over to the bank, actual bricks. Suck it out of the journal and send it over to the individual ledgers. Ledgers are individual snapshots of each account. They're in order of balance sheet, so they begin with the assets, then the liabilities are listed, then the owner's equity is listed, and then it rolls into income statement with revenue and expenses listed. So it's going to have cash, equipment, supplies, AR, and then it's going to go into AP, notes payable. It's going to go in that order. Now, this is previewing what's going to happen tomorrow. Typically, the assets are listed as 100s. So 101, 110, 120, 130. We're going to learn about that process tomorrow. Liabilities are usually 200, so like 201, 210, 220, 230. OEs are typically 300, so I did that a little bit wrong. I was making up my numbers on the fly. So owner's capital might be 301. Revenue are 400s, and you probably guessed it, expenses are 500s. So advertising expense might be 501, then we might have one at 510, 530, 540. Those are just numbers associated with it. I'll talk more about it tomorrow. Then from this ledger, we bring the account number down back to the journal as a post reference. When Carrie asked the question about when should I post, it's kind of like, oh, and maybe you don't do laundry at your house, but it's the difference of, do I do a load of laundry every day, or do I wait until, you know, the weekend to do it? It kind of stinks to do laundry every day, but then it's done. It kind of stinks to post every transaction, but then it's done. Or do you do all your journals and then wait till the weekend to do the laundry? No fun. It's all at once, but boy, you've played all week. So that's the comparison I'd make. And everybody prefers one versus the other. So first thing we're going to do tomorrow is we're going to journalize again, just because then you've had the evening to just let this all absorb in, and then we'll just pick up right where we left off tomorrow. The other thing we're going to do tomorrow is just I'll continue lecturing. Okay? If you're worried, if you're struggling, if you're fighting with your brain over this, trust the process. If it's not until the day before the chapter where it all of a sudden clicks, chapter test that is, you'll be okay. I'm of course here to help if you have individual questions. So I'll disconnect so you can log out if you need to.